Okay, hello and good morning, everyone. Welcome to Daily Pitch International with me, Darius. Today is Monday. Today is Monday, 29th of May, 2023, guys. So yeah, welcome everyone. Welcome to this Easy Markets webinar, which you can always check out on every morning, guys. I always put out the information there before the video to see which instruments I'm going to be covering. So guys, I hope you're feeling nice and relaxed after the weekend. I hope you're all feeling nice and happy. If you're not, then well, hopefully this week can cheer you up a little bit. But look, the reason why we gather here every time is to have a look at the markets, have a look at the instruments, the technical picture, a bit of fundamental, just to see how we can position ourselves for the week. But yeah, before we go further, as always, we need to have a quick look at the risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll disappear from that little left corner in there for now. I'll give you a few seconds to read the rest, and then we can continue. Okay, so now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. So now then, let's jump into the chart. This is, the first one I want to start off here is Nikkei 225. Look, what I talked about here previously, and this actually worked out nicely. So what I said to you that once let's say if we do retrace back down here, but we hold above this highlighted zone right here, then yes, maybe a rebound here could be possible. Where my next target will be again the previous highest point of May near the 31,358 territory. Well, we managed to reach that. Perfect. So good touch, good result here. And one thing that I really want to do here is probably get rid of everything, because what I do, I'll put back some of the lines again, but I think that whenever we get like overcrowded like this, it's best to just have a fresh look and see what's happening. Well, first of all, after we found like good support, let me just grab a line here, grab a magnet. So after we found good support here near the, which is the lowest point of March here, and back in March near the 26,280 zone, we reversed nicely to the upside. We cleared the EMAs here on my daily chart, and look how far we have moved away from these EMAs. Now, at some point, of course, we'll get back here. We'll go back and test the EMAs, the 50, initially the 50, then the 100, and then the 200-day EMA. But the thing is that, look, at the moment, yes, we're getting these little corrections here to the downside, but at the moment, they're only corrections. So what we need here is some sort of clarity. Now, how we can position ourselves and how we can play this game here. Well, first of all, I think I'm going to draw some of these upside lines. This one has to be like something in the form of this. So this is my first upside line drawn from the low of the 15th of March. Then the other one, the shorter term one, is drawn from somewhere around here. Now, again, this is a bit of a tentative line. Don't get me wrong. Don't put too much emphasis on it. What I'm trying to play here and what I'm trying to do here is basically trying to find some sort of logic and reason from where I could consider, for example, a larger correction to the downside. So one of the options for me is to consider maybe this upside support line. Again, maybe it will work, maybe it won't. Who knows? But the thing is that this is what the market is all the time. We have to kind of find this, or at least try to find some sort of logic in it so that we could, position ourselves. Now, for you, something might be different. For you, something else could be a little bit more logical. So that's why these webinars are kind of more of a, just, to give you one of the opinions, and then you can decide yourselves which way to go. Maybe you'll see something else somewhere else, maybe better. That's fine. That's good. But to consider all the possible scenarios, that's what we need to do constantly. Anyway, so Looking at some of the levels here. So first of all, I'm also marking here the current highest point of May near the 31,670. So don't forget that this is the last week of May. Basically, we have like 3 trading days in May left. So don't be surprised if we suddenly see some sort of extraordinary moves or something like that, because again, the week should be quite interesting, I would say. Everything's kind of piling up into this week, but I'll get to that in a bit. Now, coming back to the technical picture here for Nikkei, look, in order to go higher, I think that for me at this point, I would need to see a push above the current highest point of May, and then, yes, I will consider a move a little bit to the upside here. Let me just mark this. There we go. There we go. So then if we do clear that territory, let me just have a look at where we can find our next possible goal. Oh, well, I don't have a level here. So basically, that's quite interesting, guys. Yeah, so look. For now, what I'm going to do is I'm going to try to simplify my life here. Is that if we do clear that 31,670 territory, I'll aim for the psychological 32,000 mark. I'm going to simplify my life a little bit. Not something else, but something like around that, guys. But for the downside, now that's where the tricky bit comes in. So if we do start falling here lower, maybe a drop below this upside line could do the trick here. For a few more sellers, we could then open the door towards that 30,400 level, or if that gets cleared, then certainly yes, towards this other upside support line taken from the low of the 15th of March. Now, ASX 200. So, in terms of this week, guys, look, according to the economic calendar rule, first of all, today the US is closed, UK is closed, Switzerland is closed as well. So, yeah, probably we might be a little bit on the calm side, somewhat, I would say. Again, we'll keep an eye on the continued monitoring the futures of everything, and probably Tuesday is going to be the more interesting day. Now, coming back to ASX 200, the Australian index. So, look, what I talked about previously, and I said to you last week when I covered this, I said to you that, look, if we do fall and stay below the 7,131 territory right here, then yes, I will go lower. Did we get a breakout here? Yes. Did we stay below it? No. That means that, hey, maybe this is way too important for the bulls right for the bulls. Yes, exactly. Maybe this is a quite important floor for them, and they can see, yeah, we pushed it back up. And what I also said to you, that if we do climb back above the 7,215 territory right here, yes, I'll consider some moves higher, but only I will class that move as a temporary correction before another possible leg of selling, because look, we still have this downside line, which kind of is in the way here. So we need to kind of respect it, I would say. So let's do that. And for now, let's continue monitoring this target, this downside line. We came closer to it. That's fine. But yeah, we drifted back to the downside. Long story short, as long as we stay above the 7,215 territory, I'm aiming for this downside line. If we start falling back below it, I will take a bit of a neutral stand around here. But if we start shifting below this hurdle, let me just put this on the chart. Oh, it's very, very white. Let me just darken it up a little bit. Let's put it to 80. There we go. So if we do drop below this 7,131 territory, then that's where I'm going to get a little bit more excited with the downside, and then yes, further declines could be possible. In a way, some of you might say, but hey, Darius, maybe we're forming a nice descending triangle pattern here. Yes, we could be. But according to all the TA rules, guys, in order to consider that as a bearish indication or a bearish pattern, still a breakout through the lower side of it is needed. Until then, it could still go higher. It could still go, push north here. So that's why I'm just kind of, being careful and cautious with it and not trying to rush into things. India's Nifty 50. Wow, this one to the moon and not yet back. So first of all, it's working out nicely here. I talked about this barrier right here. I said to you that if we do clear it, this will confirm a forthcoming higher high. And yes, this barrier is between the 18,483, 519 levels. So yeah, we cleared that. Great. This opened the door towards higher levels. Now I'm still aiming for this territory right there, the 18,908 zone marked by the high of the 14th of December. So good potential target. Also, my ideal scenario is, of course, the 19,000 mark, or just slightly above that, the 19,032 mark. And then, yeah, if we can reach that, perfect. That's my, that's my beautiful life on this index. And then, yeah, we'll kind of, go from there. But yeah, for now, look, the fact that we are staying above this highlighted zone still, and yeah, everything's kind of pointing more towards the upside rather than the downside. Look, of course, don't get me wrong, at some point, maybe if we do find some sort of resistance somewhere around here, yeah, maybe a bit of a retracement here could be possible, but this is where this arrow comes in. So basically, as long as we stay above this highlighted zone, I'm going to continue targeting the upside. We can reuse some of these lines here. I think I'm going to grab this one, and I'm going to mark it this. Okay, this is a little bit tentative. So, I don't really like that. No. Okay, but look, I'll keep it on the chart for now. Okay, maybe it's, like I said, it's a little bit on the tentative side, but okay, let's see if it's going to work out or not. But for now, let's say if you're looking for some downside on this one, again, depending on how this is going to play out, maybe, let's say if we do shift a little bit more to the right here, maybe, once we come closer here back to this upside line, maybe this could align itself perfectly with this, this highlighted zone, and maybe all this could be seen as a nice breakout. So again, I'll keep that for later. For now, if we do break below this upside line, that's probably from where I'm going to get a little bit more excited with the downside. Nasdaq. So guys, the week ahead. Okay, as you know, today the US is closed, UK is closed, Switzerland is closed. So in general, what do we have installed for ourselves for this week? Well, apart from non-farm payrolls, which, yeah, it's coming out at the end of the week on Friday. We do have the ADP numbers coming out on Thursday, if I'm not mistaken, just because because the US is closed on Monday. But also in the US, from the US, we are getting the JOLTS numbers. Let me just double check. Yep, the JOLTS job openings, those are coming out. Yeah. So, and yes, your traditional end of month NFP and the ADP non-farm employment change as well. Initial jobless claims, of course, on Thursday. But I think I've seen manufacturing PMIs are coming out. ISM manufacturing PMIs. There we go. That's going to be quite interesting to see. Now, looking at the picture here, basically the technical picture, we can see that we had a spectacular move, honestly. This is just insane. Look, I talked about this on Friday, and in the morning I said to you, look, if we're going to pop and stay above this 13,860 territory, I am leaning towards the upside. And talk about leaning towards the upside. I also talked about that 61.8% retracement on the Fibonacci. Fantastic. Good. I don't know. I cannot express my happiness on this one. I mean, this is just a great result. 61% retracement here, 61.8% retracement on the Fibonacci, and this Fibonacci is drawn from the highest point of November of 2021 to the lowest point of October of 2022. So the question is now, will we get the 78.6? Well, to be honest, I want to wait this one out a little bit, because I think that what we're going to get this week, or at least we might get this week, is something a bit of a roller coaster ride. Again, last week was a roller coaster ride. I think this one could be another one. So basically, maybe a bit, if we do fall back below the 68.8, I'll consider a bit of a retracement here. Now, don't forget that we're still in this kind of debt ceiling show where, okay, they said that they have managed to kind of reach a tentative deal. Okay, you know, that's kind of helping them to boost the markets a little bit. But what does it say? I mean, what does it stop them from, you know, coming back on, let's say, on Tuesday or Wednesday, saying that, oh, you know what, we're not, like, we're struggling to reach the deal and blah blah blah, and this is what could bring the market a little bit down. So in a way, the market here is enjoying itself right now. It's enjoying the moment. It's riding the wave. It's fantastic. It's, you know, it's everybody's chilled. Everybody's awesome. Everybody's enjoying this. However, for how long? And another thing is that, of course, last week, as you know, if you were following the data, the PCE came out on Friday. Great. I mean, okay, sorry, great. Better than the forecast. And the PCE core and headline inflation numbers, yeah, came out. So that's something that could worry the Fed. And drum roll, please. This is what we're getting right now. There we go, guys. 63%. Now, look, I have been talking about this, and probably you were already tired of me saying the same thing over and over again, that after the last meeting we had, I said to you, yes, that was sitting still somewhere at 9%, but honestly, wait, this will probably jump back to 50 at least. Well, there we go. Fantastic. Basically, what it means that there is a probability that the Fed might stick with the 50 basis. The 25 basis point increase. Of course, don't get me wrong. Now this is where I'm going to contradict myself again. So because we still have a lot of data to come out. Don't worry. Don't rush into anything. Don't think that, oh, you know what, they're going to increase. But this is where it's interesting. If it's going to stay like this, let's say all the way to the 14th of June, let's say above 50, that's going to be, for me, that's going to be very interesting to see if actually they're going to raise the rates. If not, then we could have an explosion here, you know, to the upside. But again, it all depends on what's going to happen. I mean, right now in the upcoming days, because if we're going to start seeing some sort of like a sharp correction to the downside or something like that, then maybe the Fed will not, will not increase the rates, and then this will, go back down here. But if we continue to rally and the numbers continue to come out, I'm talking about the economic data numbers continue to come out, fantastic, great. Then yeah, we could actually see maybe an increase of 25 basis points during the next meeting on the 14th of June. But hey, for now, I would say let's approach this carefully. Again, we do have a bunch of data coming out this week, so keep your eyes on the economic calendar. Yes, from the US, like I said, the main thing will be on Thursday and Friday. But do not exclude Wednesday as well, just because on Wednesday we do get the JOLTS numbers coming out, and no, sorry, that's not the US, that's Canada. And Canada has the GDP numbers coming out. So yeah, that's going to be an interesting one as well. Look, I can see that I have stalled here a little bit. Is everything okay with my internet? Just bear with me one moment, guys. I think that, yeah, I hope everything's okay. Checking, just a second, checking the stream, checking the video. Look, I think I'm watching myself, and I can see that I've stalled a little bit. Okay, guys, can you see me and hear me? Because I think that there was a problem with the video. I think that there's some sort of I think my video is jumping around, my internet is jumping around a little bit. So hopefully you can see me and hear me well. If somebody can just drop a message, just hey, whatever, hi, just nothing else. I think now it's restored, but I think that there was an issue with my internet. So hopefully, hopefully we're all back on track. Honestly, I hate when it happens. It's Monday. Should not be like that. Should be easy. Well, Mondays are never easy. But look, coming back to the picture here, what I'm going to do here is, if we're going to continue to trade above the 61.8% retracement here on the Fibonacci, my next target is ideal. My ideal scenario is around here somewhere, around this 15,260 territory. And I get it. It's quite a big way to go. It's quite an important area of resistance in general, but the other option is to consider an inside swing low here of the 1st of April of 2022 near the 14,725. That could be a nice good target. Yeah, okay. Okay, guys, apologies for the loss of internet here. That's on my side for sure. For sure, that's on my side here, and I do apologize for that, guys. Sorry for the little hiccup, but hopefully everything's back on track. But just, yeah. Just if you can let me know if you can hear me and see me well, then yes, I mean, that would be perfect. Thank you. But yeah, coming back to Nasdaq, yes, like I said, if we continue to trade above that 61.8% retracement on the Fibonacci, then yes, I will continue to stick to the upside and aim for the 14,725 territory, or maybe slightly below that. We do have this little option here, the 14,642. Okay, look, this is what I'm going to do here. I'm going to stick to those two levels for now from the short-term perspective, and we'll see how it goes further. Now, for the downside. Well, this is where the tricky bit comes in. Ideally, a break of this upside line is needed, but again, look, the problem here is that I would like to see, maybe I would like to consider some lower levels from a drop after a drop below the 61.8 here, but maybe versifying. The stream is really laggy. Honestly, sorry about that. Seriously. I think that, yes, like I said, it's on my side, purely on my side, because it was normal before. Hopefully it's gonna fix it. Maybe, I don't know, try to refresh it and rejoin the webinar or something like that. Maybe like this would help you, but again, I think, yeah, it's on my side for sure. Apologies for that, guys. Hopefully I can power through this. Hopefully you'll have the patience with me if everything, but yeah, anyway, thank you very much for your patience, for sure. But yeah, coming back to the downside scenario here, if we do fall back below the 61.8, this is where I would like to consider maybe a bit of a retracement here. But this is the problem, that maybe there's going to be another, like, some sort of an upside line that's going to be in the way here. So, all that stuff. And that's why it's a little bit difficult, I think, that to find some sort of logic here. Look, in general, I will probably take a conservative approach and wait for a break of this upside line in order to go lower. But maybe at some point I'll consider, like I said, depending on how this is going to play out, maybe we're going to drift a little bit lower here, find some support somewhere maybe around this territory, 14,200. Maybe we'll drift back up, then fail to move above the current highest point of May. And then maybe that little reversal here, this little support zone, will become a little bit of a good area for, a breakout for the downside. So just kind of keep that in mind. M. Soulsby, it's fine now. Thank you very much. Thank you for confirming that. Really appreciate it. Okay, let's come back to the Dow. Look, what I talked about previously here, I said to you that if we do drop and stay below the 33,000 territory here, I'll go further south. We did go further south. My ideal scenario was the 32,000, like, kind of 500 territory right here. We failed to reach that. Instead, we found good support here, and this is what I'm going to mark right now. So we rebounded, we pushed back up, and most importantly, we climbed back above the 33,000 territory. Now, if you're looking for some higher levels, I would say a break of this downside line is needed, and maybe a push above or the remaining EMAs here, the 50 and the 100-day EMA. If we can get that, great. I will consider higher levels here. I'm going to take a very simplistic approach on this. For the downside, look, ideally, of course, a drop below this 32,620 territory would be required. But if we start falling below the 33,000 again, this is where maybe I will, start examining some potential lower levels here. Again, the only problem that I have is I have this little inside swing low here, or the inside swing high, sorry, at 32,914. So, a bit of a problematic area this one is becoming for the downside scenario. So the 33,000 mark. So long story short, for now, look, I'm going to stick to the upside, but a confirmation break is needed. If I don't get that, we could still bounce around here somewhere, and it could be a bit of a no man's land. That's why my ideal scenario for the downside is from around here somewhere from this 32,620. S&P 500. So I haven't looked at this one for quite a while, to be honest. And look, I think we need to redraw certain things. Look, previously I talked about this highlighted zone. It's roughly between let's put it this way, it's around that 4,200 zone, and we cleared it. Okay, we cleared it, we're staying above it. So for now, I would say as long as we stay above that 4,200 territory, I will continue targeting the upside. Simple as that. My next target is the 4,327, which is the highest point of August of 2022. Good potential target, but let's see if we can reach that. Another thing here, what I would like to see here is actually, I would really like to remove all the drawings and start fresh, but some of the levels could still work out. But look, let me probably reuse this a little bit this way. So 4,227, this is something that we could keep an eye on from the short-term perspective. This level can go. We can mark this little nice territory, good possible area of support. This level can't go. We can get rid of it. I'm not going to mark this because this is like weird. Let's find somewhere another level. I think on the way higher. There we go. Actually, there we go. This is quite interesting. There we go. Okay, the 4,217 and 4,227 levels, quite interesting right now. And I think I'm going to hijack this highlighted zone from here, and we're going to put it around there. Because this could become that little interesting area of resistance which we're currently kind of flirting with. So if we push above it, then yes, I will get a little bit more excited with further upside, and then we could go towards that 4,327 territory. Now for the downside. If we do start falling lower here, maybe below this little territory, the 4,175 zone right here, now that's where, yes, we could maybe potentially start examining some lower levels, but we'll have to approach everything with cautiousness, because we have the 50-day EMA here, which is also kind of doing a good job here and has been providing fantastic support. So in other words, if you're looking maybe for some downside, you could also keep your eyes on that 50-day EMA, and then we could go from there. Look, I need to speed up this process a little bit of going through these instruments, because I have stuck in these US indices for quite a while now, guys, but I think then, yeah, I need to speed up a little bit here. Right, DAX, honestly, this is... This is just interesting. Look, if you remember what I talked about recently about DAX, and I said to you that, hey, well, when we were in the range, we were waiting for that breakout. Did we get that breakout? We got that breakout. Great. Then we found resistance near the 16,374. We drifted back down, and another thing that I really wanted to point out here is the monthly chart. So what I said to you, look, we have created a new all-time high, but on the monthly chart right now, we're kind of forming a doji. And what do we do with the doji? Well, this is potentially a reversal signal. You know, again, will that be the case? You know, it's a difficult one. That's why I have my downside scenario from around here, from around that 15,800, 700 level. So this is where I'm, you know, I'm going to start considering lower levels, much lower levels if we do get a drop below that. But jumping back into the daily, that's where this is what I'm talking about. Another idea that I ran by you on Friday was that, look, we drifted back down. We tested that 15,800 territory right here, rebounded. We're again back inside this previous range, which I'm really not liking, but hey, I'm trying to find some sort of positivity in everything. So let's say we start moving sideways here a little bit. Okay. That's fine. Let's consider that. Maybe, you know, maybe if you don't like to trade this, then, you know, you'll have to just wait. If you do like to trade ranges, great, could be an option for you. Because, and another thing, this is where it could potentially later on satisfy the bears. Why? Because if we start moving sideways here a little bit, we could be forming something of a complex head and shoulders pattern. So left shoulder, shoulders here, one head, and maybe we'll form some right shoulders. But again, this is just a theory. Don't really rely on it too much because, again, we need to consider all the possible scenarios. If it's going to work out, great. If it doesn't, back to the drawing board, honestly. Look, if we do push back and stay above the 16,063 territory, maybe we'll actually form something, another head here, you know, a double head. So something like that, but let's wait and see. But yeah, if we suddenly start flushing below the 15,800 territory, that's where I'm going to get a little bit more excited with the downside. FTSE 100. One of our viewers here, can't remember, GBPUSD, something like that. Sorry if I can't remember, but asked me why I'm not picking up on for the FTSE 100. Well, look, I do occasionally pick up on it, but okay, look, if there is interest for FTSE 100, fair enough. Guys, if you have anything else that you're interested in, honestly, drop me a message there or, you know, a message after the video. Just I'll pick up on that and then I'll include it in the next video. If this is not a stock, because the stocks, I do like to look at stocks, guys, but not that I don't have expertise in that. It's just that it could be a bit of it sometimes requires more time on that, and it requires a little bit of kind of a different approach. You need to look into the fundamentals as well, so it's not always technicals. But here, look, the FTSE 100, my idea worked out because I talked about this idea previously. This is where I took the arrow from. So if I said to you before that if we do drop below the 7,687, I'll go lower towards that 200-day EMA or that 7,585 level. Tick, tick. Fantastic. Mission accomplished. Now what? Well, if you're looking for some lower levels at this point, I would say drop below this 200-day EMA and this 7,585 is required. Then, yes, I will start aiming for some of these levels. I do get it that they're quite far away here, but nevertheless, I mean, could still be, you know, a nice good target. But of course, first one for me will be the 7,474 territory right there. For the upside, well, I will take a very conservative approach here and I'll wait for a break of this downside line and then I will go higher. Until then, any move up until this downside line could be classed as a temporary correction before another possible leg of selling. US dollar, just a quick update on this one. Okay, beautiful. Look, Boate XAU USD. I am getting there. Look, I mean, this is the Boate 272. Look, this is the list I normally have to go through the video. So always check out, like I said, you'll always see what I'm going to go through the video, either in the description in there or in the list on my screen there on the right. So these are the instruments that I'm going to cover. I need to still cover. So yeah, I'm sorry. I'm going to rush this a little bit because I think I stuck a little bit too much on the US indices. Now, US dollar index. Look, I talked about this last week. Basically, I said to you that in order for me to go further north, I need to see a push somewhere above this 104.25 territory. This way, I'll get a little bit more excited with the upside, and yes, potentially we could start aiming for that 104.72. I'm going to go slowly on this. I'm not like examining, let's say, much higher levels here. But if we start breaking this upside line taken from the low of the 10th of May, don't be, the bulls should not get too disappointed yet. Why? Because I think that, look, this upside line is a little bit of a tentative one. So it's not really, something to kind of focus on too much. But if we do break below it, yes, we could go a little bit lower here, but I'm still keeping an eye on the 200-day EMA. If that's going to provide support, a bit of a rebound here could be possible. And that's why my downside scenario is from around here, somewhere from around that 103.50 territory, something like that. Because at the same time, we would fall below the 200-day EMA. But like I said, even if we do break this upside line, that doesn't mean that we're going to get very, very bearish. No, we still have an option to rebound from the 200-day EMA. But if we fall below it, that's where, yes, I will go lower. Gold, this one is, yes, this one is good. So first of all, my mission here is complete, because what I said to you last week, I said to you that, look, I'm aiming for that 1950 territory, then 1945, this 100-day EMA as well, and then my ideal scenario is a test of this upside line taken from the low the 3rd of November of 2022. Well, we didn't really reach it, so look, I think that I need to remove this arrow from here. I'll reuse it somewhere else. But now the thing is what we can do. Well, if we break the downside line, then we could go back to the upside. My only problem is here that, okay, let's say we break the downside line here, and we go higher. We could go and test the 50-day EMA, which could provide resistance again, because as it did right there, and then we could drift back down. So do not exclude the downside scenario yet, because again, we could see a pushback up here, a test of the 50-day EMA, and then if it holds, if it provides good resistance, yes, another decline could be possible. So that's why if you're looking for much higher levels, guys, then maybe actually a push above that 50-day EMA first, might do the trick for a few more buyers. However, if we start breaking this upside line, well, guys, that's, well, everybody, like I said, it could open the door towards that 50-day EMA here, and then we'll just have to go from there. So, long story short, I'm currently playing the waiting game because we're coiling up. We're stuck in between these two trend lines. I'm waiting for a clear breakout, and then I'll decide what to do next. Silver. Look at this. Beautiful. Look, I talked about this last week, and I mentioned that, look, we have ourselves some sort of a broadening wedge pattern here, and, not really sure that this is the kind of formation, and there is something like this, but we kind of formed something like that in general. Or somebody might say, hey, maybe it's a broadening triangle, which is fine as well. But in general, we rebounded from the lower side of it, and we're pushing back to the upside. So far, this idea is working out nicely. I talked about this potential idea of a rebound, and then I said to you that I'm going to aim for this downside line taken from the high of the 15th of May. So for now, I'm aiming for that. But if we do clear it and we do push somewhere above this 23.5257 territory, that's where I'm going to get more excited with some higher levels, and then we could aim for that 50-day EMA or even slightly above that. So in other words, if you're looking for some higher levels, then yes, guys, a break through that territory is needed. So far, inside the pattern, look, if we do push higher and we test the upper side here of this broadening triangle, and then it provides resistance, we could see another decline. So do not exclude still at this scenario, this one right there. It still could happen. So while we're in the formation, we could, if the formation is to the downside, if the trend here in the formation is to the downside, we could still go lower. So that's why a breakout is always required. Oil. Oil continues to form this nice little ascending triangle pattern. Sorry, something got into my eye. So it continues to form something like of a nice ascending triangle pattern. So according to all the TA rules, these patterns tend to break to the upside, but a confirmation break of the upper side is needed. So while until we get that, we cannot really get comfortable with the idea of a ascending triangle. Why? Because again, it could still drift lower. It could still break the lower side and fall off the cliff and move to the downside. And we could then aim for that 69.43 territory or even below that. So just keep that in mind. So yeah, long story short, 74 territory together with that 50-day EMA is something that I'm watching here for the upside. Cotton. Just wanted to quickly update you on this one because, again, it's something that I do look at occasionally. I talked about this on Friday, but I just wanted to run it by you very quickly. Look, on Friday we were, we were near this lower side, this upside line, and I said to you that in order to go further south, a break of this is needed. Until then, I'm just observing it. Just observing the price action. Now, you can see that we rebounded strongly. We found resistance near the 100-day EMA and near this downside line. Now, if we break the downside line again and we push maybe somewhere above this 85 territory, that's where I'm going to get very excited with the upside again. Bitcoin. So, those crypto enthusiasts, you're probably loving the moment here and you're probably enjoying the situation which we're seeing. And yes, look, I talked about this a lot and I said to you that if we do drop and stay below the 100-day EMA right here, we could, yes, see a further decline. Well, we did drop. At one point we did stay, but for a very short time, and then we rebounded and pushed back up. And look at this. Yeah, now we're testing this downside line taken from the high of the 14th of April. So if we do clear it and we stay above it, I'll go further north. For the downside, I will stick to the same game plan, honestly. I'm not going to improvise here. 26,550 territory. This is what I'm keeping an eye on together with the 100-day EMA. If we drop and stay below it, I'll go lower. Ethereum. This one's breaking the my falling wedge pattern. Okay, so according to all the TA rules, a break through the upper side of the falling wedge indicates that there could be some more upside to come. Well, in a way, I have to stick to that. If I believe in technical analysis, and I do, so I have to stick to that. So, in other words, more upside could come here, but I will protect myself as well. So if we do suddenly fall back below this lower side, because I'm still keeping this this falling wedge pattern on the chart, because if on a weekly chart this will work out perfectly, okay, great. For now the daily, okay, we're violating this upper side, that's fine. But if at the end of the week we're gonna stay above this upper side of the falling wedge, then yeah, great, more buying interest. But if we somehow fall back below this upper side of the falling wedge and we fall below the 50-day EMA, guys, I'm examining the downside again. Dogecoin. So this one's a mess, and look, let me remove all the lines here and start fresh. I will bring some old ones back here. Don't worry. I think this one could be an interesting one. So the 0.0691 territory, this is something that we could be keeping a close eye on. Or if you do like the 0.07 level itself, a psychological one, I would say, then you can keep an eye on that one. So in other words, if you're looking for some downside, a break through this territory here is needed. So let me just highlight that for our future reference. Nope, not this one. This one right here. So if we do fall below this, then yes, I will go to the downside. At the moment, what we're seeing here is something of a range, a little bit. So look, as long as we stay in the range, I'm just neutral. Yes, I'm observing the price action. But if we start breaking the upper side here of this range, let me just grab this one and highlight it this way. There we go. If we do push above that, if we do push above this, then yes, I will start considering maybe slightly higher levels here, and we could then aim for the 50-day EMA, the 100 and the 200-day EMAs. Simple as that here, guys. That's my upside scenario. That's my game plan for the higher levels. So let's see how this is going to play out. And finally, let's jump into the currencies. We'll try to go through these quickly here because again, I'm running out of time. So apologies for that. But look, AUDUSD, I talked a lot about this one last week. I said to you that if we do fall below this 0.6564 territory right here, the lower side of the range, I'm going to continue aiming to the downside. Well, we did go a little bit lower. That's fine. We did find support here near this 0.6490 territory. That's fine as well. But now we're seeing a retracement. Okay, if this downside line continues to provide resistance, together with the the lower side of the range here, the previous range, then I'm still considering the downside scenario. So because this move higher could be classed as a temporary correction before another possible leg of selling. If you're not really comfortable with this idea, you could keep an eye on the 0.6490. A break below that would confirm a forthcoming lower low and potentially could attract more sellers into the game. For the upside, I am going to take this approach. A break of this downside line, first of all, is needed. And second, the 0.6605, that's what I'm keeping an eye on for the upside. Then I will aim I'm not going to aim for something, let's say, really drastic and high here. No, I'm going to aim for the 50, then the 100, then the 200 EMAs. Because again, maybe one of them will provide resistance and then, we'll drift back down. So who knows? But we need to kind of be careful on that, guys, in that sense. So that's why I am just taking such a careful and cautious approach. US dollar against the JPY. So finally, we're getting a bit of a retracement here. We're retracing back down. We're still above this steep upside support line taken from the low of the 11th of May. But to be honest, I think now if we do break below it, and we do fall somewhere below this 139.90 territory, that's going to be my cue here to start examining lower levels. But initially, I will only aim for this territory, the 138.75. If we clear that, then I'll go further south. So long story short, some confirmation breaks are required. Until then, I am just keeping an eye on this one. I'm just observing the price action. If you're looking for some higher levels, let me reuse this line. If you're looking for some higher levels, just a push above the current highest point of May would be required. And that's roughly around the 140.92. A break of that will confirm a forthcoming higher high and potentially could attract more buyers into the game. And then we could start aiming for that high of the 22nd of November, 2022? Yep, 142.24. Good potential target, but hey, a breakout is required. And USDCHF. So I haven't looked at this one for quite a while, but let me redo this a little bit. So this upside line is still working out nicely. This level, although we had a few overshoots, this high of the 18th of May near the 0.9063 territory is somehow doing a good job in providing resistance. So if you're looking for some higher levels, guys, I would say a push above this territory is needed. Not only a false breakout, but we would like to see also the body of the daily candle staying above that area. If we do get that, great. I will go further north. For the downside, this downside line needs to go, no longer needed. And look, ideally, I had my level here previously, this 0.8995, but I think that maybe this psychological 0.90 territory could be the case, could be a good one to watch. So look, in general, you can, if you want, you can keep an eye on the area. But yeah, let's not rush into anything in terms of the downside. If we do get that drop below the 0.90 territory, then yes, great. Because at the same time, we would break this upside line. We would fall below the 50-day EMA. We would be placed below all of them, all of the EMAs here on my daily chart. And then, yes, further declines here could be possible. But yeah, for now, it seems like it could also be forming something of an ascending triangle. According to all the TA rules, such patterns tend to break to the upside. But until we get that breakout here through the upper side, it's just nothing for me right now. I'm just observing the price action. US dollar against the Mexican peso, just a quick update. Look, beautiful decline here. I said to you last week that if we do fall back below the 17.75 territory right here, I'll go to the downside. We're getting that move. We got that move in a way, but just I'm still targeting that 1753, 54 zone, approximately around here. So this is going to be my next target. If we do reach that, I'll take it from there. I'll see what it wants to do after, if it maybe rebounds or something like that. So that's the reason I'm not targeting this 17.42 level. I'm aiming for the 1754 first. GBPUSD looking good. Beautiful move away from this 100-day EMA. Look, that's the reason I didn't have any levels here, because again, look, we oscillated around the 100-day EMA and we drifted back to the upside. So look, if you want to go higher, I would say a push above this downside line and a push above the maybe this 1.2392 territory would be required. We do have the 50-day EMA, so if you want a little bit more confirmation, maybe that area could be a bit more interesting. So if we do push above the 50-day EMA as well, that could open the door towards slightly higher levels. But even before all that, a break of this downside line is needed. Honestly, until we're gonna get that, I'm not really examining the upside scenario because there's still potential for this one to go back down, especially if it starts falling back below the 100-day EMA or now below this 1.2308. Good potential area of support. So if we do fall below it, this will confirm a forthcoming lower low and potentially could attract more bears into the game who could push this pair towards the 200-day EMA. GBPUSD, just a quick update. Look, I talked about this one. I'm still kind of aiming for my target, this 1.9036. Currently, we're getting a drift back down. We're falling back below the 1.8926 territory. So, in other words, maybe we should consider a bit of a retracement here at some point. So, but look, I have this upside line around here. Also, I think I need to remove this level, maybe actually put this one instead, the 1.8823. Actually, this is the inside swing high of the 18th of May. So if we do rebound from this territory somewhere, this could be a good cue for more bulls to step in and push this one back to the 1.9036. Oh, by the way, GBPUSD to the downside, yeah, a break of the upside line. Honestly, nothing else. Until I get that, I'm not really examining any like lower levels, because any move lower right now up until this upside line could be classed as a temporary correction before another possible leg of buying. GBPNZD, so beautiful. Look, in general, I'm very, very happy with this one because I reached my target last week, not yesterday, last week. So now maybe we could start trying to find some sort of retracement at some point. Look, I have my Fibonacci's here, which are not working here because on Friday we had a further move north. But look, I'm going to mark this. I'm going to mark this peak here, the current highest point of May. So as long as we stay below it, I would say that there is potential for this one to maybe drift back to the downside. So if we do continue to trade below the highest point of April, right here near this 2.04 territory, if we continue to trade below it, I will consider a retracement here towards that 23.6% retracement on the Fibonacci near the 2.0275 territory, approximately around there. If we do clear that, I will go lower. Yep, simple as that, guys. EURCHF, very quickly on that one, just a quick update. So far, so good. Falling wedge. According to all the TA rules, such patterns tend to break to the upside, but a confirmation break of this upper side of the falling wedge is required until we could start getting comfortable with higher levels, because inside this pattern, until we're trading here, we could still drift lower. Do not exclude that scenario, guys. And yeah, I'm not excluding these scenarios too. So, for example, if you're looking for some more downside, as you can see here, the 0.9706 territory is providing fantastic support. A nice good drop below it may open the door to some lower levels. If we do then hold here near the lower side of this falling wedge, we could see a nice rebound here and push back up. So just keep that in mind. EURGBP, just a quick update on that one as well. Still in the range, not much to talk about here. So we're still struggling with some of these levels here. So yeah. If you're looking for some lower levels, guys, I mean, yeah, drop below the 0.8670 territory would be required here just to be a little bit more on the safe side. But if we do continue to slide and we fall below the 0.8646 territory right here, that's where it could become a little bit more interesting for a few more sellers. For the upside, I have this highlighted zone right here, between the 0.8719 and 28 levels. But my problem is with the EMAs, which are just kind of slightly, around the corner, I would say. If we do break this upper side here, then yes, I will go higher, but we have the 200-day EMA, we have the 50-day EMA, and we have the 100-day EMA. So basically, in other words, I should probably aim for those instead initially. After that, we'll see. Maybe we can break them and go further north. But at this point, look, we're closer to the lower side of this range. So if we do clear it and stay below it, not only clearing it but also staying below it, that's where I'm going to get more comfortable with further declines. And finally, EURUSD, kind of similar to gold, to be honest. We had the same situation here in gold. We're kind of coiling up here a little bit. We're stuck in between these two trend lines. So yeah, look, if you want to go higher, I would say a push above the 1.0760 territory is required. Then we'll aim for the 100-day EMA. If that gets cleared, the 1.0848 level could be the next target. For the downside, I would say a drop below the upside line would not be enough. Would not be enough for me, because again, I would like to see a drop below the 200-day EMA as well. Yes, I will start considering some lower levels if we do start falling below the upside line, but if we do fall below the 200-day EMA, now that's where a little bit more excitement in my eyes could shine, and then we could start aiming for these lower levels. But hey, let's not rush into anything. We're at a very key important support zone. Maybe a breakout here to the upside could be possible, but then I will be still very careful near the 100 and the 50-day EMAs. Whew, guys, so that's it for this session. That was a long one. So once again, apologies for the a bit of a lack of good stream at some point. Yes, I think my internet. There was a problem with my internet, so hopefully nothing like that will come back tomorrow. Join me tomorrow, please. 6 o'clock GMT time. As always, my traders, my daily pitch international for traders. If you find this useful, guys, if you found it useful, thank you very much. I really appreciate that. I really appreciate your time and your kind of dedication of sticking around here. So really, really thank you for that. If you want to catch me tomorrow, I'll see you tomorrow, 6 o'clock GMT time. For now, have a beautiful trading day. Stay safe. Don't overtrade. Have your stop losses in place and risk only what you can afford to lose. And everything will be fine in that case. So, see you tomorrow. Bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.